Apparently there was an audio issue. So as I was saying, our usual live streaming decided to go live ahead of the inflation, which is in less than 9 minutes from now, if I'm not mistaken. Let me double check. Yes, there's a lot of anticipation for this key figure, especially because it will give us a clue or whether we're going to have another hot reading similar with what we saw yesterday on PPI. So let me quickly double check that everything is okay regarding to the audio and visuality of this live as well. Okay, everything looks just fine. Okay, perfect. So, okay, we're good to go. So as I was saying, let me brief you up a bit, since we will be waiting together the inflation. And I would like to brief you up a bit, considering to what is expected. First of all, what is expected today from the data, from the particular indicator, is actually to present a stubbornly high inflation. We have seen actually inflation coming a bit, cooling down a bit, slowing down a bit lately. However, considering the pretty hot PPI numbers, that looks a bit unlikely today. The expectations is for 0.3% in monthly reading, so half of what it was in August, and the headline to show a bit of a slowdown, just a 0.1% slowdown in the headline. However, core expected to remain unchanged. That's based on the forecast. However, even if we see today a 0.3% headlines in both in core, 0.3 inflation in the monthly readings for the inflation for the core, and a tick lower, a tad lower actually on the headline, still it doesn't show a lot of progress. And considering the situation in the Middle East, okay, considering the situation in the Middle East, considering the data that we are getting from the US the last 2 months, and so far in October, it looks that there is still that rate hike onto the table from the Fed. It looks to be necessary. Even though we have seen a lot of Fed speeches, the agenda this week was packed with Fed speeches. All of them, nearly all of them, supporting a pretty dovish tone. Watching from Johannesburg, welcome. Lagos, Nigeria, welcome as well. Welcome, guys. Okay, we have a guest actually from Nigeria in premises. He will be glad to see that you're joining this session. So I'm gonna come to your comment in a bit, Charles, in regards to the dollar. Let me finish what I was saying about inflation, and I will be back to you. So as I was saying, considering the data that we've seen so far, considering also the fact that we are seeing okay, the oil actually suffered significantly last week. It came back to the 80 dollars per barrel, but still is holding at overall. The outlook continues to support a strong energy sector. So if we put into this uncertainty regards to the future of the energy sector, and considering also the fact that the jobs on Friday came triple of what was expected, okay, we expect to see inflation today stubbornly high. Obviously, surprise to the downside. It will be good for the Fed because it might give them a relief to proceed with their dovish stance. Because, as I said, the whole week was full of Fed speeches, and what they mention is that we are at the peak. We don't need to do anything else. We are done for this year. This was actually the outcome from the overall outcome from their comments. So that doesn't go along with the data that we saw so far. So, and that's why the markets are keeping on the cards the one rate hike still on the table within the year. So everything depends on the inflation today, because PPI, as I said earlier, came much hotter than expected. Okay, so that's why we have seen that dollar corrected. There was a steam out of the rally in treasuries because the PPI came slightly hotter than was expected, and what is one of the favorite, actually is the favorite indicator for the Fed after the inflation and the labor data. So that's why we've seen the Fed fund futures are also slightly lower after the PPI and the hawkish comments just from Mr. Bauman, the government Bauman. So still there is an increased risk for a rate hike in November. Whether now they are 50-50, so it's a 50-50. The odds are 50-50. Today's reading, it will be key to see whether that betting on 50-50 chances for a rate hike will change significantly. So we are less than 2 minutes away from the data. Okay, so let's see what Charles was saying. Dollar has been bullish for donkey's time. However, it remains to be seen if it will remain its uptrend. Let me share also dollar, since we are speaking about dollar. Yeah, it was a bit sideways, dodgy, choppy, if you prefer. So, and that was ahead of the anticipation. I have a random trend line over here. I know, ignore it for now because I have my own aims for keeping that trend line on. It belongs to the daily chart, and I would like to monitor how it will close the week because it's looking that it has broken the immediate support that we have the whole actually since July. So yeah, is this a reversal signal of this long uptrend? Is it the beginning of a downtrend? Is it just a correction before another boost to the upside? Everything depends on the data. So however, it seems to remain to the upside. So basically today, in a minute actually, in a minute I will put the 30 minutes chart, guys. Okay, in a minute charts, if the inflation remains indeed high, okay, this is calling for more rate hikes. This will increase the odds for November's hike, and even put on the table a potential second one within the year. So it's pushing back the interest rate cuts. So are the data out? Not yet. Let me check. I would like to share also. Let me share also the calendar so we could see together if there is an instant. Okay, it's coming out. What's Bloomberg saying? Bloomberg is not saying anything. Okay, that's dollar boosting higher. What we have, inflation at 0.4%, higher, and that was expected, guys. It was pretty obvious. So yeah, considering the data, it was something that I was expecting, at least, guys. Inflation, the monthly reading came higher than expected, well below the last month reading, indeed, but above expectations. Headline remains unchanged. Headline at 3.7, yeah, unchanged, but above expectations once again. The excluding food and services, 4.1%. So you see the key that is holding inflation up is energy and food prices. Energy food. So excluding the energy food prices, we've seen that reading came in line with expectations and below last month's reading. So guys, I don't know whether the Fed speeches the whole week were on purpose dovish in order to keep a bit the dollar under control, or whether it's indeed the case, but data speak and they are like shout that we're not done. It might not be in the format of rate hikes. I don't know. Fed has a lot of mechanisms to try and put inflation down and bring inflation down. So we might indeed see them putting in action different tools as well. But the data today, the inflation figure today, is in line with what we saw yesterday from PPI. Another hot reading, stubbornly high inflation affected by the food prices and energy for September, at least. October with the Israel and Hamas conflict. We might see the next inflation. It depends. Everything depends on the oil. So I don't want to confuse you right now. But yes, another hot reading. Let me see a bit. What's the headline from the Bloomberg S&P futures? 0.22% higher. Yeah. Okay. So why dollar spike? What has been bullish for the? So it's because it's just that is just a bit of a confirmation, we could say, that on November we might see indeed the rate hike from the Fed. Let me find the Fed futures to see what's the odds right now. I was 50-50 last night after the PPI. Okay, I'm referring to November's meeting from the FOMC. Let me see. Okay, come on. Let me see. And I will share it. We're watching from Kenya. Welcome. So that's on November. Oh my God, guys. Okay, I would like to share this with you. This is from the CME group. It presents the probabilities of a rate hike, and this is what you see: 92.6%, 92.6% for a rate hike between 25 to 50, 525, 550. This is the current probabilities for November's meeting. 525 to 550 for 1st of November Fed meeting. That's why you're seeing dollars spike higher, getting back to 11th of you cannot see it. Oh, am I bad? I'm sorry. Entire screen. This is what I was showing earlier. My bad. I didn't realize that. I didn't show either the calendar. So here it is, 92.6%, 92.6% expectations for a rate hike for the first of November. We have a look on the breakdown as well from the sector. Yes, so yeah. While for December's meeting, there is a lot of deviation, as you can see. So still the 25 points is the dominant scenario. Yeah. So Let's wait and see. Let's wait and see. So let me get rid of it. But yeah, dollar 105.7980 is the high of the day. So let me just refresh, having the 5 and 9 setup over here. So this is the intraday setup that I have. So as you can see, zoom out, it turned to, this is a massive move actually. Let me measure it. So this is around 40 pips. Yeah, 40 pips move. Broken yesterday's top, returned to Tuesday's highs, extended above the first resistance of the day, and we have seen that RSI is already at 70 territory, indicating that there is further steam to the upside. Stochastic posted, can you see that? Yes, you can. Posted a bullish cross as well. Okay, so yeah. So that's on the data. And something that I didn't mention, I ignored a bit. Let me bring it back. It was the jobless claims. Let me bring back the calendar so I could show it to you. Here we are. Let me bring the calendar back. Jobless claims. Where's jobless claims? 209,000. Okay, pretty close with expectations. The last week's reading was revised higher. So unemployment still relatively high. Pretty much, not really complies. It doesn't really comply with the NFP on Friday, but it is what it is, right? So the breakout the initial jobless claim, there are changes as we can see. While let me check the continuing claims. So initial jobless claims flattening near 200,000. So that hasn't changed for nearly a year now. So since last October, we're seeing the initial jobless claim somewhere between 200 and 250,000. So still for more than a year is near 200,000 levels, while the continuing claims are a tilt higher with a move back above 1.7 million. Very interesting, actually. Very interesting. Okay. So that's the fact that initial jobless claim continue to skim on the 200,000 level, and the continued claims did not move back significantly. It's just indicating a little more layoffs, but still healthy, solid employment. So these are, you might say, but Andrea, the fact that we keep having jobless claims at such a high levels, okay, it might mean that, okay, the labor market in US might cool down a bit. Not necessarily, because it indicates a very, very little, a bit more layoffs, significantly small number. While based on the NFP on Friday, we can still see a pretty solid and a healthy employment, with inflation still holding higher. That's just that doesn't change. I'm afraid, and it's just another nightmare for the Fed. Let me check a bit the headlines to see whether I'm missing anything. No. Okay. Okay. So, um, yeah. So whether the inflation today could turn the market or start pricing in a November hike or not, who knows? Because that will depend also with the situation in the Middle East. So the geopolitics are also in play significantly. Okay, and that along with the dovish Fed speeches had caused a bit of a outflow from the dollar into the safety of gold, for example. Significant, actually. There is a lot of shift into the safety of gold the last few days. Okay, so guys, just for all of you that you are here currently here, if you want anything to ask me about an asset that you want me to analyze, feel free. Okay. I like the interaction. I want you to ask me questions, and I will try to reply ASAP. Okay, this is your session. I'm doing this live analysis for you in order to have an immediate interaction and to help you as much as I can. Okay, so Ade was about to ask something, but you stopped. You kept how? I'm waiting for your question. I'm watching for city of Enkul. I cannot pronounce that one. I don't know how to pronounce it. I'm afraid. En Enkurlen, maybe. Okay. Where are you actually? I don't know the city. I'm afraid. You can help us a bit. Gold. Okay, your nickname is Gold. Let's have a look on gold. Okay, I didn't analyze in depth sorry in depth the dollar, but I will come in a bit because I want us to analyze together the daily and weekly chart due to that pullback, a significant pullback. So for the time being, there is a bit of a resistance, as you can see. Exactly, can you see that is? This is automatic high and low that I didn't put it myself. It's automatically based on the day's highs and day's low. So can you see that it was exactly on this latest up fractal back on Tuesday morning, exactly on that level. So there is a ceiling over here, immediate resistance. Okay, so and that should be also, let me just, I think it's the 61.8 Fibonacci level from what I see on the week's down leg. Okay, oh, pretty close, but not. Okay, so the asset, it broken the 50% retracement level from the down leg that we've seen this week, but for the time being is failing to extend higher, so it came back below 50%. So let's wait and see. I'm gonna come back in a bit. I'm gonna go to the stocks and then to the gold and see how the stocks actually reacted on the news. So this is Nasdaq. Let me just like to keep a bit the plain charts over here. So there was a lot of consolidation ahead of the data, as you can see. It's something that we discussed also. We mentioned in our morning's calendar as well. So a lot of sideways movement ahead of the data. There is a pullback actually right now after post the inflation. So let me see a bit what's going on. So yeah, so 15,356. The overall, the stocks, as you can see, this is the daily chart. Overall, they had a remarkable week so far, with the US indices reversing, and reversing nearly 2 weeks losses, as you can see. So it's back to the, let me just, yeah, it's back on the mid of September territory, recovering, as I said, the majority of the losses that we have seen on September, with the next key ceiling pretty much on September highs, and that's somewhere at 15,700 territory. So if I just, so let me put the intraday picture on. So as you can see, there wasn't a significant reaction, reaction on the stock market. And why is that? I don't get the last comment, Stephen. I don't get the last comment. So, yeah. And sorry, Manuel, you asked about Nasdaq. No, you asked about the S&P 500 and Dow, and I am replying with the Nasdaq. I will get to this as well. Okay, so it's a small pullback, back to the pivot point of the day. However, still, that is not the signal here from the momentum indicators. The signal that we are getting is that this pullback is not really a strong one. It's a limited one. Why am I saying that? Because I can see that stochastic are still flat. That is a bearish cross indeed, but they're pretty flat. There is not a slow pointing to the downside. They are holding a bit flat. Also, MACD is positive. There is a bit of a slowdown, but still above zero. RSI still above 50. Yeah, so we need to be patient over here. What's going on in the 30-minute chart? Still, you see, flat stochastic. Flat is actually, there's a clash of the signal line and histograms over here. The only one that it dropped down was RSI, but still above 30. So this could be limited move post the data. And why is that? This is because we still have on the background, okay? We still have on the background first of all, there's still the scenario that they might not do anything. What I mean, there's still the scenario that the Fed, along with ECB and Bank of England, they might announce indeed that they will stop. That scenario is still on, regardless of the data, okay? The odds have increased indeed for a rate hike, but still there is a scenario of an unchanged policy. While also, let's not forget that, sorry, I'm running a bit out of steam. I forgot to put some a glass of water over here. So also, let's not forget that the stocks have found support from the geopolitics as well. So there is still a lot of global uncertainties, with the Chinese developer sector in a failure, with the uncertainty with the war raging between Israel and Hamas. Still, the scenario, the Fed, the expectations for the Fed to announce that they are at the peak still remains to be seen. So all this uncertainty, along with the excluding Bowman, this dovish tone that we have mainly seen from the Fed this week, they're still providing some support to the stocks. Okay, remember that markets are ahead of themselves, so they have priced in all they have the markets might have been done on pricing in rate hikes, and they might have already started pricing in the possibility of a cut and of a pause, first of all, and a cut, not within the week, not within the year, but next year, always, and they are ahead of themselves. Remember that. But the situation, the situation in the Middle East, the Chinese development sector, construction sector, all these are just providing some kind of a support to the equity market. And this is actually the fourth day in a row, if I'm not mistaken. 1, 2, 3, 4. Okay, yeah, fifth day in a row that we have seen that. All these global uncertainties are actually keeping a bit on bonds and stocks, with most treasury yields actually on a pullback. And let's not forget that there is also a shift into the commodities as the safe haven demand rose after the weekend due to the situation in Middle East. So what else I wanted to share with you? Let me see your questions. Let me see what's going on over here. Breakout of inflation is out, but I think we covered everything. Energy climbed. There are some gains in the services and housing, but the major sector that is holding inflation higher is the energy, is the gasoline prices, services prices as well, transportation cost, obviously, vehicle prices up, obviously, yes. Yeah, another solid report over here. Okay, so let's get back to the questions. So yeah, my dear friend Emmanuel. Okay, let's have a look on Dow and S&P 500 as similar to Nasdaq. They remain to the upside. 1, 2, 3, 4, 5, 6, 7th day in a row for Dow Jones over here, which opened today above the 20-day moving average. Okay, and is trying to hold above it. Okay, 20-day moving average is at 30,000 territory, 30,030 actually, but let me round it up. Here, okay, 34,000, which is the confluence of 200-day moving average, and just a tick below the 20-day moving average is the immediate and strong support level that we have for Dow right now. However, let me zoom out a bit. Okay, however, as you can see, we'll zoom it out because I want you to see that. Can you see this area over here? You see this? This was an area. Let me just fix it a bit. No. Count. Okay. Where's my objects? Okay, here we are. So this area, it was a key support level for Dow since June 2023, so the current June. So from 1, 2, 3, 4, for 4 months in a row, it was a key support area which broken at the end of the September. So it was a key support, the asset broken below it, quickly turned higher, and currently, Okay, while it turned to resistance, currently it returns back to a support level once again. However, we are still holding at the lowest area of the last 4 months, with the asset still below the mid. Yeah, below the halfway from this down leg that we have seen since the mid of September. So what I'm trying to say is that the outlook for Dow hasn't changed yet. Hasn't changed because we need to see it holding above the 34,000 territory, which coincides the 3 months, 4 months support, the 200-day moving average, the 20-day moving average as well. And also we need to see it reversing at least 50% of the down of the losses that we have seen in September. So in order for the Dow Jones to change from neutral to positive, okay, we need to have a decisive boost higher, extending and above the 34,200 territory, and 300 to be more precise, okay, 300 territory, because for the time being the outlook looks neutral to negative. Why negative? Simply because let me just zoom out a bit, is, as I said, below. It's actually at the it's let me just, okay, the down leg, actually the initial down leg started over here, so it's still at the lowest territory that has been the last 6 months, 4 months, sorry. Okay, also is holding below the 50-day moving average, with 20-day moving average having posted a bearish cross and extending below the 50-day moving average, and ready to cross also the 200-day moving average. If the 20-day moving average cross below the 200-day moving average, what that means, it means that we have, at least in the near term, in the medium term, still a bearish, increasing bearish bias. So if we see within the week the 20-day moving average crossing below the 200, and that in collaboration with a failure of the asset to extend above the 50% retracement level, that would be a signal that this rally, it was limited, and the asset might pull back to 33,600 territory, or even at the bottom, which is the 300,000 territory. Okay, so now it's at a key resistance level. Okay, key resistance level. However, based on the RSI, let me put my MACD as well, it looks that there is no room to the upside. Yeah, you see RSI flatten below 50, so there is a lack of bullish momentum. MACD, okay, rised a bit higher, but still below 0. So yeah, it is what it is. It looks that is running out of steam. This rally is running out of steam. So everything depends on the headlines, obviously. But yeah, from a technical perspective, the situation over here is neutral to negative, as long as the asset fails to extend above 50% retracement level. Now let's get back to S&P 500. You asked about S&P 500 as well. This is Nikkei. S&P 500. Okay, so I would like to clarify something. The reason why S&P 500, Dow Jones move mostly compare, I mean, they move more, or they gain more in comparison with the Nasdaq, is because Nasdaq, and a heavy tech Nasdaq, is affected by the technology, which doesn't have, let's say, this week the best. It's not one of the best weeks. There's a lot of pressure coming from the tech sector. Now, S&P 500, very similar with the Dow. So what we are seeing over here, however, is that the asset is for a third day in a row above 50, above 20 day moving average. Okay, I'd like to use the exponential ones. Okay, just a second. Let's put the 20 exponential one with yellow. Here we are. Okay, what we're getting over here is that, okay, look at that, guys. I ignore a bit the Bollinger. Actually, I'm gonna delete Bollinger because I want you to check that one. So indeed, there was a decisive pullback, trying to recover for 7 days in a row, but there is a bit of a change on the 20-day moving average over here. It flattened since last week, and now it's looking that is pointing a bit to the upside. So we might see, so there is, okay, and MACD over here increased significantly above signal line, still negative, so still there is a lot of bearish defense on USA 500, but something is looking like something is changing. It's too early to tell, actually. So let me just see where we're standing. Okay, the Fibonacci extension, just expansion, sorry. The default ones, okay, thank you. Boom, 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 already broken the 161.618 territory, extended and returned back above the 3 months support level. So okay, this should be somewhere between 61%. Yeah, extended above. So we have a full day, a confirmed day that yesterday. So yesterday confirmed a closure above 50% retracement level and above the 50-day exponential moving average. Is holding above all moving averages for a third day in a row, as I can see over here. So there is an increasing bullish bias in S&P 500, but still a key retracement level at 44.51. So, however, a much more is well supported. Let me go down to the 4-hour chart to see what's going on. So, up. A bit of a pullback, boosted higher in the Asia session. No, actually, last night, hold some gains. There is a bit of a pullback currently, but still 4400s remain as a key support level. So, guys, as I can see intraday, there is a lot of bullish bias in the S&P 500. So, as long as the asset remains above 4400, it seems that the bullish outlook continues for S&P 500 with key resistance level at 44,000, 4400s, 4450 basically, 4450, 4440 to be more precise. So here we are. Okay, so you see, even intraday, 20s above 15, they keep getting wider and wider and wider. As long as the asset holds this support area, okay, markets keep rising. RSI presents some corrections, but still rising. As you can see, if I connect the lows, you can see that it's keep rising with some instant corrections. So this pullback looks to be a correction rather than a reversal for S&P 500. Dear Emmanuel. Gold today, yes, let's do gold as well. By the way, one of the key movers overnight, at least, it was silver. Yes, let's check gold. Gold, a huge beneficiary asset, but actually, of the geopolitics, as the safe haven demand moved from the safety of dollar into the safety of gold, especially due to the inflation. So jumped, continue up, recover 50% of the losses that we have seen September, flirting with the 20-day moving average. So the attention with gold is the situation with gold over here is that there is a very strong key psychological resistance level. It is the 1900s territory. So indeed, the concerns of escalating tension in the Middle East are the main driver of this rebound. It is the reversal that we have seen in gold, so benefited from safe haven demand, as I said earlier. And the key over here, it's also the involvement of Iran. So because there are speculations that Iran may be involved, and also there are speculations for additional sanctions for the Iranian oil and Iran in general, this is something that supports the gold. Okay, it supports the gold, and the greater the geopolitical tension gets, the further the support for commodities will be, for gold more precisely. So currently, on the pullback of dollar, we have seen gold benefiting, and is at, as I said, is at the confluence of 50% retracement level and the 20-day moving average. Now, if I zoom out a bit, with the 1900s, the next level to be closely monitored to the upside. Intraday, we can see that that there is let me just okay, perfect. So intraday, this is the 4-hour chart. You can see that we'll still have small body candle, but keeps to the upside. So this pullback looks like a bit of a consolidation meant rather than an actual pullback. The asset remains well above pivot point, above all the moving averages of the day. The spread between the 20 and 50 exponential moving average is getting wider. RSI is at 74, pointing to correction, but with the slope is very narrow. So that indicates that bulls are remaining in control. MACD over here keeps rising, still bulls in control. Stochastic over here, there is a bearish cross, but still the asset is above 80, so still bulls are in control. So immediate support, my dear friends, for gold is the depends on which time frame you are trading at, but the immediate one is the pivot point of the day, which is somewhere at 1865, is it, which is 1869 level, and the 20 period moving average over here, 1865 level, 1865, which coincides also with the with yesterday's top. So here we are. As long as the asset remains above it, here above the 1860, 1864 territory, the asset remain bullish in the near term. Let's go down to the 30 minutes chart. On the news announcement was a dip down, long tail downwards, but quickly turned higher and closed at 1878. Okay, broken the 20 period moving average over here, but still well supported by the 50 period moving average, still above its pivot. So MACD well above zero. So yeah, limited pullback. As long as we see it consolidating at this area, unable to extend below the the 18 here, then it holds still to the upside. So daily, yeah, key will be, guys, how we will close tonight, whether we're gonna have a confirmation of a closure well above the 20 moving average, and and that will mean a shift to the upper Bollinger Band area within the next level to be closely monitored at the 1900s or even 1907 territory. Okay, as I said, the more the escalation, the more the boost will the gold will get. So for our chart, yes, I think I did that. So north and east. Let me check a bit the news, whether we have anything new. Okay, I can see Anthony Blinken earlier, the U.S. Secretary of State, on its feet, along with Netanyahu, Israeli president. Yeah, so they had an announcement earlier with U.S. standing on Israel's side. And if there are no further questions, I'm gonna finish by seeing a bit the strongest currency and the weakest currency so far today. The strongest currency so far today apparently was Swiss, but that was before the data. Don't know whether this is still the case. Let me check the traders board. Traders board, HFM. So let's check a bit together the traders board. Okay, dollar actually, in dollar and CAD are the biggest gainers so far today. Okay, you see, especially against antipodians, so Aussie and Kiwi. So that everything changed right now. Aussie and Kiwi are right now the weakest currencies of the day. Let's see, out of curiosity, Kiwi. Actually, let's finish with Kiwi. This is the daily chart. You can see that it had 2 days of nightmare. That's a decisive sell-off, strong sell-off in Kiwi over here for a second day in a row, pulling back and breaking, reversing actually 3 days highs, and actually, yeah, a huge sell-off, falling from 60-60 territory, 60-50 territory to be precise, down to 59-70. That's how much big. So we have a 85 pips decline in Kiwi. In Kiwi over here on the pullback of due to the risk. Actually, there are risk sensitive assets, and regardless of the of the dollar's choppiness lately, we are seeing this pullback. And because today the dollar recovered some gains, that pullback extended. Currently, immediate, let me check the 1 hour chart as well, so you can see, okay, that it broken the weak support at the 60, not 60 territory, extended lower, keep posting consecutive lower lows, with the next levels to be watched at 59.60 and 59.40, another 40 pips to the downside. So these are the next immediate support levels for Kiwi, which if they see them broken, their attention will turn on October's bottom and the 58.70 territory. Okay, guys, I can see that there are no questions, so I'm gonna call it a date. Let me see for one more time the headlines to see whether I'm missing something I should share with you and I forgot or I didn't notice it. Yeah, actually, I started this video by saying that you need to keep an eye. Let me put it in a naked price action here. Yes, we need to be very careful with dollar this week. The week's closure will be key, especially after this doji long tail candle that we got last week. That it might just be an earlier alert of a potential downtrend. So are we see? So the key here is to keep a monitor the dollar to see whether we are at the beginning of a potential downtrend, the bearish market for dollars. So it has been to the upside for 10 consecutive weeks in a row. Yeah, 10 consecutive weeks in a row. Last week performance, bearish performance, along with this week's pressure, just add to the odds whether this rally is running out of steam or it's near to its end, and we might see a pullback with the markets pricing in the dovishness of dollars. So keep an eye on how the today's candle will close, but more precisely how the week will finish for gold, because by connecting the fractals, okay, of since July, the latest ones or the bodies, if you prefer, whatever you prefer, okay, you can see that the pullback that we have, the sell-off that we got for 6 days in a row, has broken this support trend line that was since July. So is this the beginning of a new trend? It was just a correction, and we're gonna see reversing back? Question mark, question mark, question mark. Obviously, the weekly candle will give us a clearer technical view for the dollar, okay? And also the Fed Fund futures, and whether we're gonna keep seeing the odds of a rate hike increasing, while the scenario of pausing is still on the table. Okay, yields jump as well on the data, and that explains the support that dollar got also the last hour. So that's for me, guys. Immediate resistance from anyone interested in dollar. Immediate resistance is at here we are. That was already broken, so that falls at 106 level. Yeah. Okay, 106. Actually, just a breath above it. Here we are, which is coincides with the latest up fractal from yesterday, and also a round number. Yeah, so Have a great Mehdi. I reply for gold. Once I finish the session, you can drag and drop your cursor, and you will find gold and see my analysis on gold. But a key beneficiary, as the key gainer, let's say, from this escalation. So depends which time frame you are. Okay. As I said earlier, so this area that I put in gray over here, it was our immediate support, which apparently just broken. Okay, so immediate support in this 30 minutes chart is down to the day's low, which is 1873, and the pivot point of the day at 1870. This is the next immediate support levels after the immediate support broken just now, actually. Okay, but overall, as long, I don't know how many of you are day traders or whatever, as long as we don't see the asset returning back to 1865, as long as we don't see that, then the asset remains neutral to positive. While intraday, we have a bearish bias, an increasing bearish bias, with the next support at 1873, so $3 down, and 1870, so another $3 down. ATR should point around 3.23, yeah, 287. So apparently ATR agrees with me. Okay, guys, have a great day ahead. Thank you very much for watching. Keep an eye on the headlines, especially any escalation in the conflict and on the geopolitical side. So yeah, a strong dollar after the PPI, with next key resistance at 106. Dollar, the gold reversed significantly, but still the overall outlook, the medium-term outlook, remains positive as long as the asset is not returning back below 1870 level. Yields to the upside, stocks also holding gains, but there is a pullback. It looks to be limited for the time being, but still we are 7 minutes away from the US Open. Yeah, that's it. Thank you very much for watching. Have a great day ahead, and I'll see you later on. Thank you. Bye-bye.